Well, hello. This is Chris McAlpin with Sound Financial. I'm getting this question a lot these days. We just moved conservative and now stocks are really growing again. Have I missed out on the rally? And I know I completely understand that question. Since March the 20th, the stock market has really run up. It's really regained a lot of lost ground. And you couple that with news announcements that we're going to reopen the economy soon, or it's different this time, or we're looking for a V-shaped recovery. And all of us feel a fear of missing out, or missing out on those big returns. But before we proclaim victory or it's a big all clear sign, let's look at a few facts. The U.S. economy has lost over 20 million jobs in 4 weeks. Economists are forecasting some of the worst economic data since the Great Depression, at least just for the second quarter. We hope it stays right there. But so remind yourself when you hear those news stories that our news outlets love to sell us the best story this side of utopia, or tell us the worst news this side of Hades. They don't often stick to boring little things like the facts, because they're too boring to listen to, right? But let's look at the facts for just a minute. In bear markets, we get these bear market rallies that they go by all kinds of nicknames, but we'll just stick with a bear market rally for now. In March of 2000 to 2002, the S&P lost 29%, it regained 17%, and then it lost another 39%. In the 08 and 09 financial crisis, the market peaked, it lost 18, gained back about 11, and then lost another 53. Right? Each of these loss, gain, loss scenarios they're called retracements, and they can actually happen during bear market cycles. And so in the article that we've included in this, if you look closely, you'll see a chart that kind of describes these, and a picture's worth 1,000 words. And so we're in a scenario where the market lost 34%, it's gained back over 20%, but we don't know what's going to happen next. And the technical analysis of the stock market points to more losses in the future. But that same analysis, even further out in the future, looks like we're going to have a great opportunity for gains. And so right now, we're going to continue to stay conservative. We really like being on the bond side of the portfolio. And as I've said often, these don't even want to take this as a personal recommendation, but this is just what we're doing in our portfolios. We're watching the data closely, and we'll continue to do so. We welcome any questions that you have. We look forward to hearing from you, and we appreciate the trust that you put in us. Thank you.